In our Trader Rundown today, Todd Bubba Horwitz is here to take a look at the broader picture of what's happening in the trader world. And always good to have you on the show, Bubba.
Great to be here. Good morning.
So what do you think about this topic that's coming out in a lot of places? Money is being pulled at a very quick rate out of hedge funds. What's gone wrong here with these hedge funds?
Hedge funds are typically higher risk, more illiquid investments, and they're not paying off. You know, again, you have to perform, and even the great Carl Icahn has had a couple of down years in a row. So you see that really when you're going into a hedge fund, you're not hedging anything. What you're really doing is you're taking some more risk, trying to create bigger returns. And unfortunately, when markets get very quiet and things happen the way that they've happened over the last couple of years, there hasn't been a lot of volatility in the markets, which creates a much bigger problem for hedge funds because there's not as much sweeping action. And that's really what happens. And now you've got the hedge funds now stepping on the short side again. We've seen Bill Ackman, what he's done with Herbalife and VRX. So at the end of the day, they're not performing. And why would you want to stay where they're not performing with your money?
What is performing is the stock market. And I'm sure there are hedge funds out there that are giving a decent return to their investors, sure, right? It just seems like all of a sudden, though, some are in a bit of an issue to have a quandary here.
It depends. I mean, if you consider, Berkshire a hedge fund, which you could certainly consider, it's a massive fund, it's performing. And again, there's people that are going to perform, and there's people that take higher risk. Now, you have to, if you're going to get into one of these funds, you just have to understand what their goal is and what type of risk they're going to put you in.
Right now, the stock market is giving great returns on people's money. So would you just do an index play here right now, do you think? You mentioned complacency in the market, low volatility. What would you do here?
I would not really take new money and put it in right here. Now, if you're a regular investor and you're just always putting in, you buy highs, you buy lows, it's no big deal. I believe in hedging your portfolio, not a hedge fund, but actually hedging it using options to create synthetics so that you can protect and always be in the market. But overall, the market is setting up for a sell-off. Now, I'm not saying we're going way down, and I'm not saying that the bull market's over forever, but we've seen this pattern we're seeing now about 6 times in the last 10 years, which is simply volatility settles at a very low complacent level. People start talking about how complacent the market is and how safe it is, and the minute we think it's really safe to get back in the water, that is the time you'll get one of these slaps in the head, and the market will take a big sell to the downside. I would expect to see something in the next few weeks. Now again, that doesn't mean we're going to go straight down, and if I'm investing, I'm not panicking, I'm going to sit back and wait. But you're going to expect to see this, and you should expect to see the next big move will be lower, and then we'll see how the trend breaks. But right now the trend is still higher, and until that changes, there's no reason to move anything.
Thanks for the Trader.